Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's February 11th. This is going to be a chart lesson for the day, and this will wrap it up for the week. No chart lessons on Fridays anymore. So, looked like we had a range day today. We had a really nice sell-off here. Again, this happened yesterday. Very similar. All of a sudden, prices sold off strongly, but once again, we recovered most of it by the end of the day. Actually, yesterday. Yeah, we recovered most of it back yesterday, not quite as much. Actually, today we recovered and actually moved higher than that and closed right about the same place where the sell-off started. So, but in the big picture, this is a range day. We dropped a little outside the range down here. So really from here on, you were really playing this downtrend. And then once it reversed, there's two separate trends you could have played on the way up here. So, and even this bigger one, you really were probably going to play this shorter term thing, trend channel here. You're not going. There's probably nothing in here you want to trade. I don't think so. This late in the day, you're just going sideways right at that original support resistance. It's kind of hard to know what prices are trying to do here. Are they going to go lower? Or are they going to go higher? It's hard to determine. So, really, there's just not much. There, really, after 12 noon. I've got maybe three green ones, and that's it. So again, around noon, from about noon to 2 o'clock every day, things just seem to drop off, and that trend is continuing. The trend of prices not doing anything after basically after noontime to 2 o'clock. So anyway, let's back out here. I'm gonna try to back out a little further. I had at least two people said they had a hard time seeing the bars, and so I'm going to try to back out a little further here. Sometimes I forget. My screen's pretty big, so I mean this looks huge on my screen, and you can't see a whole lot of context. But I've shown you the big picture context already. But let's go through the trades. This trade set up right around 7 o'clock here, and notice you got a little spike up in a channel, and we're trending up here. And you simply pull back first entry, then there's a second entry long, nice signal bar, go long right there. That's a classic second entry off the key entry point with the EMA running congruently with it. So we run up and then we just started going sideways here. There's another possible second entry here. Actually, if you look, you got a first entry, second entry. So this is a third, but I'd look at this as just sideways, and so one leg down in a second attempt, but your signal bar is no good. You do get another test here, but again, I don't think you want to go long here. You've got some support resistance here, but I would look at this as the first low. So I don't feel you had a double test until here, and there's also a little hidden second entry. So I like going long right here. This one's one you might argue it could be green. It's a little double bottom there, but it does break one tick lower, and generally you need to wait on this second entry. I'm sorry, you want to wait on a higher low. You don't really care about second entries when you're trading these tighter ranges. You really want to stay away from that thought because you'll get chopped to pieces on second entries and failures and back and forth. So really, when you're going to trade a range this tight, the only thing you can do is get long off the lows or short off the highs, and you don't have a lot of room there. So you got to get something really good like these two. So you might argue for that to be green, like I said, but I think you're better off to wait on a double test here. We are still looking for a retest of the high, so that leads you to maybe want to say, hey, that should at least be green. But once you get that triple test, take it. And of course, now you got a break and two legs up to a new high, and you actually end up getting one more push higher here. There is another second entry right here, but again, you just don't have much room. Prices failed out the top. You can't go short yet. I think the only way you could go short here is on a lower high, which doesn't come till here, and you can't go short right into all that support because this is what happens to you right here. You get stopped out. We do get another two-legged move up, so a second entry, but no signal bar is just not very good, and it looks a little congestive. So it's a shame that you have to miss that little move down, but that's the way it goes. And really all prices did was they dropped down into this yellow channel, and you just don't get a chance to ride that down or anything. And somebody asked me today in the forum about ranges within ranges and things like that. And you can clearly see the green range within the yellow range. I mean, it looked like we were going to be in the yellow range, and it just got tighter. And so there really is two separate ranges here. So that's not common, but it happens. I mean, it's not uncommon to see maybe the bigger range and then the little congestive range or something, but it's not real common to see two that are that large within each other. But it happens, and you can see it right there. So I mean, you can't ignore, once you start to see this support, you can't ignore it. So anyway, you actually get a second entry long here, and notice the move down with the break and two legs to a new low. So that's one. I mean, I like that one being that far away from the EMA on second entry, but I think you should wait on the higher low, which comes here, and then it's just not a very good setup. You really need a reversal pattern here to be thinking long yet, because you might get another measured move. And at this point, I was looking for the measured move from right here. And so you got to be real careful on that one. It turns out the high point is over here, so that's where your measured move would start. And you can see we got almost a perfect measured move before it bounced again. So I think this is a little risky. You could probably argue for it to be green, but I would wait and on something better. You get I'd probably want a reversal pattern here, but you get a higher low here, but everything's still below the EMA. Not a perfect signal bar. If it closes one tick lower, it's close to being in the middle of the bar. And then we come back, but now you get this double test. I still think you're better off to wait. Actually, I don't call that a double test. I'd call that just a first test. You made your low, now you made your first test. Of course, there were some tests of it over here as well, but we did push lower. So again, this one's a little risky, but you might argue for it to be green, but you get a sure double test right here. Notice the low, you test it once, you test it twice. We couldn't go lower. That's the place to go long, and you see how it does finally take off there. And I believe this broke lower and turned and went out the other side. I'd probably wait on this to close before I went long, although that is an engulfing bar, and maybe you take that trade on the engulfing bar. We run up here. Again, it's tempting to go short, but look at this little channel working up, and there's no close outside yet. So there's too big a chance you break lower and go higher. And you run down and you get a second entry long right here. And I marked this one green because there's not a lot of room back to the highs here. I think there's enough to get out. The key is if you enter, you got to make sure you got enough room to get out before these highs. And actually, it's a little bit higher than what I've got it. Right there's where it should be. So if you don't have enough room by going long with a buy stop, you'd have to let it break higher and drop a limit order a tick or so back, and then maybe you got room. I think there's room regardless there. So, and it is a second entry long off the low. I just think the bar is really big, and you need to get in a little closer to the low with a little less risk on that. You get a higher low here, but you can't go long right into the resistance because you see what's happening here. It does push higher, but sometimes it doesn't, and it comes back. So no other entry there. And then you finally break out the upside, and notice you get a close outside move to a new high, and you get this bar way away. It's still a little aggressive because most of the time you want to wait on a lower high, but we don't get one here. Of course, you won't know that you get a lower high till later. So we actually had a little bit of a higher low here, but in order for it to be a lower high, which is what we need to go short, you needed to break higher right here first. Then you probably could have gone short right there, but it doesn't happen. It's just all part of one move, and there's no correction higher till down here. So that one's a little aggressive. However, on these failed breakouts, especially with this channel having played out, sometimes you catch those really good moves, and that could be an important high for the day. and this was no exception. You can see prices took off from here, and you would have had an easy runner here most likely. Again, you're better off to wait on the lower high. It just never comes. And while I'm thinking about it, I know somebody's going to ask me, well, what's the difference between this trade and going short right here? Well, notice the channel's still in play. Here you got a break outside a new high, plus this is a failed break out of the range. This one's still inside. So that's really the difference there. So they look the same. Those of you that still think we're pattern traders or still trying to trade patterns, this is why you have these questions a lot of time, because you don't see the details of the context because you're not skilled enough yet, and that's reasonable. But you'd be surprised how many times I'll get an email and say those look just alike, and sometimes they even look closer than this one. You can clearly see this one's there's no break, but if you take my two trend channels away, then they look almost the same, and that's what people do. They look at it and say, well, what's the difference in this? They look exactly the same. Well, the context is nowhere near the same, so just make sure you understand that. But we drop on down. You get your measured move, so it's too dangerous going short here, especially with the support. If anything, you're probably going to get a failed breakout here and a reversal back up, but unfortunately you don't get a chance to trade it back up, and then we're heading down again. But notice what happens here. You don't get back up to the highs, and then you come back down, you go lower, you get a first entry long, you make a second leg down, you get a second entry long, and it fails. So if prices break lower there, guaranteed we got people trapped. Go short there. And that's why we like to trade a higher low here, because this can happen to you trying to pick this here. And it's real clear we're working down here. So this confirms the trend line. It's just a first entry short though, but because it's a failed, notice the new high, first entry long, second entry long, it fails. And look, we only look for failures with the trend. So in other words, if we got a second entry short here and it failed because we're trending down right here, we don't want to go long. You look for the failures that are counter trend to get on with the trend. And I had a conversation in the forum yesterday with somebody like that, and he can't understand. He can't understand how you can say it wasn't a failure, but he's trading it totally out of context and totally different than the way we teach it. So I think I was able to help him understand his flaw in his thinking, but so it made me think to tell you everybody that, because I've been doing this so long, but some of this stuff seems so basic that it doesn't even ring in my brain to explain it differently. So, but just make sure you understand, first of all, failures are for skilled traders. If you're new to this, forget about failures. Just look for the basic second entries with the trend and then trade the ranges by buying the support and selling the resistance. That's what you need to be concentrated on. Because if you try to learn failures along with everything else, you're just going to get all chopped up and confused, and you're going to delay your learning process. Once you get a clear understanding of how to find the trend and finding the second entries with the trend, failures become real clear after that. But you can clearly see a first entry, second entry there, and it fails, and we're trending down. So take that failure, and you could tell it was a trap that trapped people long, because look, whew, and that's why we like those trades. I mean, you get a runner there, easy trade. You catch this one trade, that's all you need for the day probably. But we drop on down. We just start working sideways, and this was the overnight lows, I do believe. We go all the way back over here, you can see that. That's why the blue line is down there. This blue is the larger channel. And you can see we're dropping on down, but you really don't want to go short way down here right into support. So if anything, you're looking for a failure. Unfortunately, you don't get a good setup. You actually get a failed second entry short here. Notice the new low, first entry, second entry, but you don't want to go long right there into that EMA, right into the previous support, because it might act as resistance, just kind of like it did here, and it ends up just dropping lower. You do have a little channel working up, but this two-tier channel is still in play. And we don't know which one of these is going to win out. Obviously, the channel wins out, but we still get a break of it. And it looks like the range, the overnight lows are going to hold, but they don't. It drops on down. And unfortunately, there's no short or longs in there. And you can see you just had to be patient down through there. And then finally, you get the break, you move to a new low, and you get a first entry, you push on through the EMA, you get a second entry, and you get a chance to go long on a failed second entry short when your trend channel is played out, and we're hoping that maybe you get a failed break out of the range as well. And there's where you go long. And it just runs back up, and notice how you're finding resistance right there at the same place at the previous support resistance. So it's hard to know what prices are going to do, which ones are going to win out. We don't know. And it's hard to know with that price action. So just sit tight and do nothing. We do get a little failed break lower, but no setup to go long. And then it's just rocketing higher. You got a higher low here, but you can't go long right there out of that congestion that far away from the EMA. And notice the first leg up, and we look for a measured leg, and we pretty much got a perfect measured leg up before it turns down again. So yeah, you just don't really get a chance to go long here. You might have looked at this as a failed second entry short. Notice the new low, first entry, second entry. But again, it's looking a little congestive. We're not quite back to the EMA. It's just not a really good reversal pattern. Plus, if you draw your little trend channel there, you got a close outside and two legs up. So we could be reversing too. So you want to be real careful about going long right there because you've already got a close and a new high. But we do get a second leg up, and then it fails, and you get a lower high here. This one, if it wasn't bouncing off the EMA and you had a little more room or you were underneath it, I'd probably make that red. But there's a little bit of support across there. Of course, this one's a little lower, and this is a lower high when we're looking for a reversal down. And if you draw your trend line right there, you can clearly see that you got a channel working. You know, you might have a possible trend line working down. So you may take that trade. It's a little aggressive. You run down, and now you get to a reversal pattern. But again, you're right here at their support and resistance. But notice we push below it and come back. And this actually breaks higher and turns down. So it's a failed second entry long at the previous support resistance. It seems to be acting as resistance again. And it is the first close outside this trend channel line or this trend line. So it's probably going to trap some people. So you may take that trade. It's really got just about enough to scalp out, and then it bounces. And then we come down here and notice how we bounced here once, twice. And that's the other reason that one's a little aggressive, because at this point, they're pretty spread out, but you've bounced there twice. If it bounces there again, then you really want to be concerned about it. Unfortunately, you could look at this as a double test of this level here, but you don't get a setup. But it comes back. Notice how it pushes higher, comes back, and it tests it again, and you get a little failed break lower. That's one that may turn out to be an important low, so I like those. It's aggressive though, because a higher low is better, which comes here. And I didn't mark this one because again, it's right here where we're getting a little resistance. Again, you could probably argue for it to be green too. There's not much room back to that high, and we've turned down here a few times, and we're still right at that level. And you can see we didn't go far, and then we're back down. So prices just were not real sure where they were. You know, it's a lot of indecision right there. And of course, we bounce, and that takes us into 2 o'clock. And again, you just don't get any setups before we get into 2 o'clock. There is a failed second entry short here. Notice this new low here, and you get a first entry, second entry. But it's congestive. It's not back to the EMA. It doesn't look like a reversal pattern really, although you got one leg up, you may get another one. Really, you've already got, you're looking at it like this, and you've already got your 2 legs up. So that's another reason I really don't like going long there. It ends up going higher, but again, you may look at this as for another measured leg. like so. And you see we pretty much, that gets us back to the top of the range, and that's pretty much where we went to. But that's into 2 o'clock. So I don't think you want to enter any of those trades right there. And that pretty much did it for the day. So that's going to wrap up our week. We're 20 minutes here. I don't see anything else. Let me back out again just to show you the big picture. But you can clearly see we were just sideways until we had this sell-off. And it took a little while here before prices decided, hey, yeah, we're going to reverse. And we actually had 2 legs up here. There's 2 legs up on this leg, which is, you can get 1 leg out of that. And then, so come back and measure this leg. And look over here for another measured leg. You can see we went a little higher than that before it sold off. So always look for your measured legs, because that gives you clues as to where prices are probably going to try to go. And when they, and when they don't get there, that's telling you something as well. So, but it just gives you clues to where prices are going. And so when they start trending up here, the target's up right up in this area somewhere. And it's really helpful to you. And those things work. I mean, it's amazing how many times that they'll give you a measured move to the exact tick. I mean, it's scary how often it'll do that almost. So anybody tells you that market geometry is not real in trading, they don't know what they're talking about. I show this over and over and over, how market geometry is a part of any kind of price map, price chart for any of the markets. You can see it. So it's there. But anyway, I'm going to wrap it up. I hope you had a good week. We had a couple of pretty good days. We had a couple of weak days too, but I think the good days made up for it. So hopefully you had a good week. Hopefully you're learning something. We'll be back again to do it Monday. I'm done for today. I'm done for the week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.